coming in from the management over at Mindtree. But now with four IT giants having announced their second quarter numbers, let's dive into how the sector is holding up. Largely, the commentary has been positive, that there are green shoots visible. The fact is, on the ground, from what we're hearing, there are challenges that continue to haunt India's IT sector. Let's get perspective on this. Mitul Shah is Head of Research at Reliance Securities, and he's joining us on the show. Good evening, Mitul. Great to have you on India Tonight. Mitul, from the earnings reports from TCS, Wipro, Infosys, HCL Tech, perhaps you've been poring over them and in detail. The commentary that we've heard from respective managements, how have you culled out what really holds good for the IT sector, placed against all the global recessionary headwinds? Since the sector is so dependent on discretionary spends by companies, I would imagine those would take a big hit in recessionary times, wouldn't they?
Yeah, good evening. To some extent, you are right. This slowdown in European countries and US, as well as probably recession in US, will have definitely some impact on this IT spending of the global giants, which in turn will impact the revenues of this company going forward. But if we look at the commentary by this management, they are winning new orders and deal wins are very strong across geographies as well as across the verticals, particularly the geography where we are more concerned, like European countries. This company, both Infosys as well as HCL, reported strong outperformance. Even their Q-on-Q growth in the European region is higher than the Americas. That is surprising. Even if we talk about verticals, the manufacturing segment, wherein all these automobile companies are facing issues because of the supply constraint and various other slowdown issues, these companies reported much higher double-digit Q-on-Q CC growth. That is giving a different picture than what Street is estimating. And certainly, these new order wins by HCL in the range of 2.4 billion, Infosys surpassing all these records. Those things are giving even more positive picture rather than kind of a negativity.
Mitul, where are these growth opportunities for the IT sector that are being spotted by these companies like Infosys and HCL Tech? Considering that there is caution already in BFSI, retail, now even telecom, is it going to be in cloud computing elsewhere? Tell us.
So cloud migration is a very big positive driver of a revenue or revenue growth driver. Even Infosys has indicated that digitization is another big area where they are growing consistently more than 30% since past several quarters. So these two are the segments wherein if any major enterprises or organization entered into transformation, they cannot stop it in a midway. They need to continue it. They may not go for additional or a new, completely new programs, but the whatever programs going on. And see, very important point we should note down that these deal transformations and those type of programs are helping in improving the efficiency. So in various scenarios wherein slowdown, people start thinking of a cost saving measures, and wherein this IT transformation plays an important role. So these two aspects, particularly digital transformation and cloud migration, are the driving factors for these companies going forward.
How much does the high attrition level in the IT sector bother you from a futuristic standpoint? Companies have been trying to retain talent. They've been doing it through promotions, skill set training, variable pay options. But really, it's been tough for them to retain talent. Is that indicative in some way of the state of the sector in any way? What does it tell you, especially in light of all the moonlighting debate that has been going on too?
See, here we have seen very divergent scenario wherein the companies like HCL, Infosys are recording a downward revision in their trailing 12 months attrition rate. So they are indicating that now attrition has peaked out and it has already moderated in second quarter. So certainly Q3 onwards, we'll see further improvement. Whereas few companies like in case of a Wipro or even TCS, this is not yet coming down and this is in fact slightly higher. And these people are also indicating wage revision, which they have taken during the middle of Q2. So negative impact of the salary hike and talent retention cost would be visible in Q3 for few of the companies like TCS and Wipro. Whereas in case of HCL and Infosys, it seems to be that it has already played out and positive benefit of better utilization with a freshers hiring is now coming on the roll, and all those better utilization should result into margin expansion going forward rather than any negative impact of higher attrition for companies like Infosys and HCL.
And what about the depreciation of the Indian rupee against the US dollar? That could really help the Indian IT sector in getting higher revenues and higher profits, wouldn't it?
Yeah, rupee depreciated nearly 3.5% during Q2, and which has certainly supported to these companies' reported revenue in INR terms. But in terms of cross currency impact, there is a kind of a negative impact from the Europe and US region, because when they translate it into USD revenue, it gives a negative impact. But certainly on the margins front, this rupee depreciation is acting positively, as major cost factors are in rupee terms, and most of these companies highlighted roughly around 30 to 60 basis forex benefit because of the weakening rupee during Q2 performance.
So, Mitul, how are valuations looking in the IT sector right now? Which are the stocks that you favor within the IT back from a medium to long-term perspective?
See, as we have seen strong run up in the revenue as well as profitability during the previous 2 years of pandemic for entire IT universe, all the valuation went up significantly, and roughly they started trading at 40 to 60% premium to historical averages, which certainly didn't sustain. And right now also there are companies which are trading in the range of 20 to 30% premium to historical average, which we believe is difficult to sustain in a situation where already kind of a down cycle for the revenues and margins started some time ago, maybe around 2-3 quarters ago. But still the situation in terms of people migrating through cloud and digitization will continue. So these companies would enjoy at least 10 to 20% premium to historical averages. And from valuation perspective, we find that Infosys and HCL are comfortable. They are still well within this range of less than 20% premium to historical average. So we believe that there is upside potential for companies like HCL as well as Infosys, or maybe to some extent Mindtree also. But we are not greatly positive on the TCS, where we believe that this valuation for TCS may not sustain, and there would be pressure on the valuation. Valuation may contract by at least 5 to 10% from current level for TCS.
Mitul Shah, thanks very much for joining us on this edition of India Tonight. It's a pleasure talking to you and getting your perspective on the prospects within the IT sector. Yes, there are headwinds, but it seems there are certain green shoots that are quite visible, and we've heard it in some of the commentary from some of these IT companies that have been reporting their second quarter numbers. More clarity will emerge as we go ahead, but is this the right time to invest in a beaten down sector like the IT pack, perhaps at the kind of valuations like Mitul was saying? These may not be available in the future, so perhaps it's time to go a little fishing when it comes to the IT pack. Meanwhile,